Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Lynn & Associates with your financial market wrap-up for this Wednesday, the 30th of August, 2017, just after 4 p.m. Central Daylight Time. Well, as we can see, we have sort of a mixed bag today. We have the two indices that have been acting the strongest up nicely today, the NASDAQ and the Russell. The Dow down, but that's still probably energy-related to a degree, and the S&P up a fraction. Metal market's still in a bit of a retreat after sharply higher moves off the North Korean situation. Speaking of that, Russia's already told the U.S. that no, they're not in favor of more sanctions against North Korea. They don't think that would do anything but provoke things even worse. So the U.S. is already seeing that there's certain of its, ally would be the wrong word, certain of its fellow members in the UN backing away from that. In the dollar index, up a nice amount today, 63 points higher at the expense of the euro, which is down a full point. Now, I mentioned yesterday that in the euro, sooner or later, you were going to start getting the attention of the European Central Bank as you got over 120, actually closing in on 121, and today you're suddenly back under 119. My guess is, it wasn't my words, obviously, but the bank was hearing that, and whatever happens in these markets sort of happens. If we look at the bonds and the notes, close to unchanged on the day. The crude oil down another 48. I was talking to a major energy analyst when I was doing Bloomberg Canada just about 20 minutes ago. And I had brought up to them the fact that you've thrown everything bearish at the crude right now, and this is all you're getting out of it, just under the $46 mark. Said maybe the market's starting to give us an idea where a bottom in this market is. That doesn't mean I'm bullish. It means that you don't have refineries buying. You've got slowdown in production where you're going to put it all. The refineries don't need it. All those elements at work. And $45 seems to be the number, with a spread widened out between Brent and this rather dramatically. And we're seeing that with this type of number and this uncertainty, you're probably not going to see big rig counts come on for a bit here. As you know, let's face it, if you're going to bring on a rig, you're looking around you, you might go, okay, wait a minute, maybe I'll postpone a little bit. But the technology is so important, because out of that well, you got lateral wells, you got better fracking ways to do this. You're able to pull more out than you used to be. And that is why you keep up with the production numbers. By the way, the EIA number today showed another 5 million decline, but the gasoline and the distillate numbers are still not showing declines. People might ask, what about the shortage in crude? Let me tell you, there's a flotilla coming from Europe at us right now. I read about 40 tankers full of fuel. Asia is sending over other fuel. You're going to get your fuel from other areas during this short period as we get the refineries eventually back online from Hurricane Harvey. When you look at the Dow, this is not that bad of action, folks. You got a market that is sitting here for the week up 62 points at 21,871. It is approximately 170 points from its all-time high. Not that far. You still have momentum to the upside. Today you did close 3 points lower. So yesterday's close was the high, most recent high close. If you take a look at the chart, you're getting this whipsaw action now back and forth as the market's trying to figure out what to do with that. When I look for a bias, is the market trending? I can tell you it is not. You have a pattern of a higher high and a lower low. That is not an uptrend. When we look at where the battleground is taking place, I want you to study the red line. It's the 18-day moving average of closes, MAC as I call it. And that's your battleground right now in this market, trying to figure out where does the next trend come from. We might not even get one really set up until after Labor Day. Why? Tomorrow's Thursday, you got the non-farm payrolls report on Friday, and then we're closed for Labor Day. So it's very possible this market just goes into this holiday mode in front of all this. I'm not saying it will, but you've got to understand the mentality at work. You came down, challenged your lower Bollinger Band yesterday, turned right around, back to the 18-day average. All you're doing is in a neutral posture right there. Momentum, though, is pointing to the upside. And if you look at the close, it did close over the 18-day average, so the bias is still up. Sideways market, but those are the elements at work. When we go to the S&P 500, we have a pattern of a higher high from today. We have a lower low, momentum pointing up. The market's got upside bias since it closed over the 18-day average. Here too, though, that number, you're just over it. Are you going to just swing back and forth? You might. I cannot say we're trending, but we have a bias that's holding up to the upside. The same thing in the NASDAQ, higher high with a lower low, momentum up, and these numbers are overbought. So you're instantly overbought in this market. It wouldn't surprise me if you make a run further at the upper Bollinger Band that you run into a real hard amount of resistance against that. In the Russell, the market continues moving higher. Now, it's pretty interesting because this market's been moving higher, didn't get itself overbought right away, still isn't there. It's in an uptrend, higher highs, higher lows. That market has got upside bias as it's over the 18-day average of closes. Momentum's pointing higher. First resistance point, if you can get there, is 1398, the 100-day average of closes. In the VIX, it's more of the same. Every time you get a volatility spike, you collapse on it. And I'm sure a lot of traders that play this in the pits are seeing that, and they're going back and forth. We're having a ball at Chicago Board of Options with that right there. And what these guys are just doing is they're playing the extremes. Now, one of these times, over time, you get burned, but it's been so many years that they're used to doing it, and the new kids have been taught that they'll get stepped on. I was a new kid once at this. You know, I was in the elevator today. Somebody was telling me how they used to bring to me trading paper on the floor. And I said, what year? 89. I said, well, I'd already been a broker 20 years. You know, it's how it works. And you learn the tricks of the trade, and nothing's always the same. In TLT, the popular ETF, I warned you yesterday, I'm going to repeat again. This market's about to turn down its embedded reading. It needs a surge in price tomorrow in order to prevent that. When you reopen tomorrow morning, keep your eye on that. If that gets under it, the odds favor there's some profit taking. But you've had nothing but an uptrend going into Friday's non-farm payroll. It hasn't happened yet, so officially, and that's how I talk, you're still in an uptrend with higher lows, higher highs. You've hit your upside target. You're backing away, and you have a market that might lose this embedded reading, which could call for a break back to the 18-day average should it happen. Obviously, the big unknown is how the market reacts to Friday's non-farms payroll, but they're already talking 185,000 jobs, 0.2% increase in wage. They're not expecting much out of it. And the big question is, that might have been enough to set the Fed off in December for a rate hike, but with Hurricane Harvey, you've got all these new elements the Fed's got to take into place. Plus, now the Fed's going to get to look at how Congress comes back after Labor Day, and does anything get done between infrastructure, taxes, how much money do we have to throw at the ravaged areas? I'm hearing, I had heard it was going to be less than Katrina. Now I heard a report, could not have been a half hour ago, that now the damage is going to exceed the value of Katrina. However, how it gets paid for might be government money, not insurance money. We'll find out more. In the T-bonds, trend is up, but notice you lost your embedded reading. Therefore, unless you get a big up tomorrow, and that's what TLT is telling you, the odds favor this market's going to try to make a correction where price and the 18-day average might come together. In other words, I think the pros are out of these markets, getting out of them in front of all this. Maybe in front of the holiday. The 10-year notes, the market hitting the upper Bollinger Band twice and backing off again. Momentum starting to turn down from an overbought condition here. Dollar index, as I mentioned, I thought it was going to be short-lived under that Bollinger Band yesterday. Momentum pointing up. The market is no longer in oversold territory. The big question is going to be, do you run into resistance at the 18-day average, or do you slice through it and get up over the swing line high of 93.37, and the market just start bouncing backwards and forwards again? Hard one to call going into the non-farms payroll. In the September euro currency, it's the flip-flop of the dollar. So you've got momentum pointing down. You've got a market that might pull back to the 18-day average, look for its support there. And the question is, does it get underneath the lower of the swing lines, the 117.86.5? Actually not lower, but that's the swing line low. That's probably something in the cards. Look at what the Aussie did. Gets up to the upper Bollinger Band 3 days in a row and bang, 2 days back to the 18-day average of closes. Momentum turning down, no trend, sideways action, higher high, lower low in the market. Japanese yen, well, wouldn't surprise me if you go right back here, right down to the 100-day and the Bollinger Band. The safe haven play ended when you hit this upper Bollinger Band. It did the same back here in these rallies, right back to the 18-day average. Now that you slice through this number, you have no trend left at all in the market. So I'm just going to call it going back and forth. But because you closed under that average and momentum's turning down, I think you light up the potential for the lower Bollinger Band and the 100-day average. In the crude oil market, you are number one oversold. You are trending lower. Got lower highs, lower lows. We'd expect all that if the refineries aren't buying. I don't know that you'll embed. And the interesting part is you can't embed anytime this week. It would be next week at the earliest because you still don't have both numbers under 20. Therefore, I'm just viewing this as an oversold market. But I'm going to keep posing the question. If the refineries aren't buying, and this is your lack of buying demand in the market, and this is all you're breaking down, are we starting to look at trading bottoms? We saw one form here at 44, around the 42 level back in June, and this market, does it make it through that, or are we going to end up with a series of overall higher highs in the market? Things that you just watch. For the gasoline, certainly shooting up because you need the gasoline. You got the Labor Day in other parts of the country. Gasoline demand's going to be there. The market's going. And for traders that just close their eye and buy the markets, this is what's going on. It is over the upper Bollinger Band. It's overbought. It is in an uptrend. That's my words on it. Nat gas. Nat gas is acting bearish, not bullish. Momentum pointing down. You've got, with today's action, lower highs, lower lows. Until you get over 299, the market is acting bearish. Now, you take that out, and if you don't take out 288 in the process, you can flip-flop instantly and call for the upper Bollinger Band. But the bears have control temporarily. We'll see if they can drop the market, and maybe the lower Bollinger Band comes into play. The interesting thing about nat gas is, unlike days of yore, when we had all the rigs, offshore rigs, producing our nat gas, if you will, for us, you've now got all these shale areas. And there's a lot of them that they produce wells just for the nat gas, and they produce the gas anyways in normal wells. We have a whole different world supply of nat gas that is not impacted strongly off of just what's going on in the Texas area. Remember, I'm talking right on the Gulf. You go inland, plenty of oil being drilled and plenty of natural gas. Question is moving it around, infrastructure problems, and that will get resolved too. I'm Ira Epstein. I want to remind you that my research covers all this. Now, what a great way for you to start your September with. I really write a lot. I put out a lot of research for my clients. I write it all for my clientele, and I cover in detail so many markets. Then what I do is I back up what I'm saying with a morning video. These are free videos you're watching me in right here on YouTube. That's not where the other videos are. You need a user ID and a password to get into them. I cover 40 markets with full of day trade ideas, swing trade ideas, and longer term ideas. Orders to get in, orders where I'd be wrong, orders where profits could be taken. If you'd like to give it a try, make it available to you. 20-day free trial. All you need to do is call my staff, 866-973-2077. You can go to our website, www.iraepstein.com. You'll see a carousel of free offers. If you're watching me on YouTube, click right up here. You'll see that icon. That'll take you right to where you go for the form. And underneath us on many websites, it says, click here for Ira's free offers. Do so, and they'll be right in your hand. So that's the way that you get it. What do you have to lose by trying it? And if you haven't tried it, or if you have, and the season's starting, you might want to subscribe. You can do that on our website. I'm Ira Epstein. Have a great day, and I'll see you all tomorrow.